I'm a 19-year-old with over £25,000 invested in the stock market, so I'm going to go over the 4 index funds which I personally invest in and I think are the best for beginners. Before we get started, hi, my name is Harry and I teach personal finance because school does not. So before we get into the 4 best index funds for beginners, what actually is an index fund? Well, all an index fund is a basket of stocks. So instead of investing your money into one stock such as Tesla, you are investing your money into a lot of different stocks. So for example, the S&P 500 is 500 companies. So if you put £100 into that index fund, it will be split between 500 companies. All this does is make an investment safer and slightly less volatile. So it's a really awesome one to invest in long term and get some amazing growth. You have 2 different types of index fund and I'll show them up on the screen. One says DIST at the end, which stands for distributive. The other says ACC at the end, which means accumulative. And all this means in simple terms is when you hold your money in an index fund, some of the companies within the basket of stocks give you a payment called a dividend, which is a small amount of money based on the size of the stock you hold. So if I have £400 in, again, I'll say Tesla, and they give a 1% dividend back to the investors, you might get £4 back. So with the DIST index fund, what this means is that £4 will be taken out and put into the cash section of your ISA. If it's accumulative, so ACC at the end, what this means is the dividend will go back into the index fund. All the ones I'm going to show are ACC ones, just because that's what I choose. It really helps accelerate growth because the dividends are going straight back into the investment. However, you guys, if you prefer the distributive ones, can take the index funds I'm going to say, the 4 that I think are the best, and you guys can just choose ones that are distributive, which are the exact same index funds, however the dividends are paid out slightly different. So the first index fund which I recommend to beginners is the FTSE Developed Europe. The reason I put this at the number 1 spot is because it actually makes 40% of my portfolio up, and it's a really good one to help diversify away from American stocks. Now, you get charged a 0.1% annual fee, which is called an ongoing charge, and I'll put this up on the screen. The biggest sectors is, I wrote here, finance, industrial and healthcare. These are the 3 sectors which make up the bulk of the index fund. Obviously, this index fund involves the whole of Europe. However, it is not evenly distributed. The number 1 biggest holding is actually within the UK, and I'll put a photo on the screen to break down the exact holdings and what percent each country is. The reason this index fund is so great is because it diversifies you away from AI, which is really concentrated sector amongst other popular index funds. For example, the S&P 500 is nearly 40% of AI focused companies, so you're super dominant in that one industry. The second reason is, again, as I said, a 0.1% ongoing annual charge, so very, very low. And again, it diversifies you away from just American stocks. The Vanguard FTSE Developed Europe has had incredible results over the past 5 years. So I'll put on the screen the breakdown of what the returns have been over the past 1 year, 2 years, and 5 years, because the returns are amazing. So it's a really great one to hold long term. The second index fund which I suggest for beginners is the iShares S&P 500. Now, I hold the iShares S&P 500 and it's about 10% of my portfolio. What this is an index fund for the 500 biggest companies within America. So this is a really good one, but again, it is fully in with America. There's no other companies, so it's not that diversified. I also wrote down here that it's 35% tech focused. So it again is very dominated within that industry. The charges are also very low per year and they are at a 0.07% ongoing charge, and I'll put the official document on the screen now. FTSE Developed Europe, I'll also put the breakdown of the returns that this fund has gotten over the past 1 and 5 years. This might be slightly higher than the Europe one just because it's so dominated in the industry of AI, which over the past decade has done extraordinarily well. The third index fund which I suggest for beginners is the FTSE All World Dividend. The FTSE All-World Dividend is basically a pie made up of companies which pay regular dividends. So, what a dividend is when a company makes some profit, it can either reinvest and put it towards growth, or they can pay it as a reward to shareholders for holding their stock. A famous one is Coca-Cola, which Warren Buffett holds, which pays a high dividend yield. A dividend yield is what percent the company pays you per year, depending on how much you own. So if it pays a dividend yield of 10% and I own £400 of the stock, they're paying me £40 a year to hold that stock. So all this index fund is a build-up of companies which pay high dividend yields, and I wrote down here that the past 5-year performance of this index fund is 11.37%, so super high again, and it's quite a stable and long-term one which is not very volatile whatsoever. Something to keep an eye out within this index fund is that 40% of it is USA focused. It's very common with index funds that a large percent of it is USA focused or technology focused. So bear this in mind if you own the S&P 500 and this index fund, because there might be some overlap and you might own more American company stocks than what you realized. I'll put on screen a breakdown of the sectors of which this index fund contains. 30% of it is financials, which is the number one industry that it involves. The fees on this are slightly higher and it is a 0.29% ongoing annual fee. And I'll put the specific and official details up on the screen so you guys can check them out. Sorry guys, my phone died, but the biggest industries within this index fund is technology and financials, and I'll put the full breakdown of each industry within this index fund up on the screen. The ongoing annual charge for this index fund isn't very high, it's at 0.17%. So that is a full breakdown of the 4 index funds which I recommend for beginners. Now, in my opinion, I wouldn't just choose one of these index funds and go all in on it. For example, if you go all in on the S&P 500, you're very involved in purely America and also 40% just technology focused. So it's not actually very diversified. For me, and what I've done is put a percent of my portfolio in each of these index funds, which fully diversifies me within the market. And what this helps with is, because I'm so diversified, is I'm not that affected day to day by things like interest rate changes and any global news. So in my opinion, I'd put a percent of your portfolio in each one of these index funds, depending on your risk tolerance. But I hope this information helped you guys, and thank you for watching.